All right, good evening. It's 6:30, and I'd like to call to order this Committee of the Whole on Tuesday, August 12th at 6:30 p.m. Roll call, please.
Schwartz. Here. Alex. Bergson. Carter. Cowart. Esri.
Here.
Harper.
Here.
Hartke.
Here.
James.
Here.
Jay.
Here.
Kibler.
Here.
Langenheim.
Here.
Maxwell.
Here.
McGuire. Michaels. Mitchell.
Here.
Petrie.
Here.
Quisenberry.
He's here.
Richards. Rosales. Schrader. Kurtz.
Here. I'm pretty sure we have a quorum. It's close. But let's move forward. I'd like a motion to approve the minutes, June 10th, 2014, please.
So moved.
Whoa, okay, Stan, Jeff. We want to get moving quickly, I see. All right, let's have any discussion or changes on the minutes. All in favor? Aye. Opposed? Motion carries. Thank you. I'd like a motion to approve the addenda for this evening.
Second.
So moved, Jeff. So moved, Max, second, Jeff. Thank you. Any changes to the agenda? All in favor?
Oh, I actually would.
Jeff?
Do we mind if we move the addendum for policy personnel and appointments just under item 1 anyway, so we can potentially do an omnibus?
Yeah, we had planned on doing that
Thank
as
you.
an omnibus motion
Great,
later
thank
on
you.
for the entire drainage districts. But certainly, we'll move that up as part of the number 7A. Kevin A1. Thank you, Aaron. Okay. Any other changes to the agenda? All in favor? Aye. Opposed? Motion carries. Is there any public participation? I don't have any in front of me. Okay. We just have Roger and Judge. Okay. No public participation this evening. Do I have any communications from the board? All right, I have 2 items. I wish to congratulate our chief engineer, Jeff Blue, named Illinois Society of Professional Engineers Engineer of the Year for the state of Illinois. So we will send our congratulations to the best engineer in the state, who is now eligible as the best engineer in the country. And I think we certainly have that too as well. So that's the first. Second, as you'll see in your desk, a copy of a letter I received August 8th from the Illinois Environmental Protection Agency. I'll just quick the first paragraph. This is a letter in response to my May 20th letter to the Governor Quinn concerning the Bahamut Aquifer and the Clinton landfill. And this is the response that the governor announced just a few days ago concerning the changes in the siting and modification of the permits for toxic and PCB waste dumped on the aquifer. So we want to thank the governor for at least taking that first step, though we feel that there's more need for further steps to be taken. That's it. Any other communication? All right, let's close. Let's start with policy personnel. Quiz.
All right, good evening. First thing that we have on policy, personnel, and appointments, in Section A under appointments, we have a long list of drainage district appointments. And I am going to, I want to take this as an omnibus motion, and I'm going to let the chair name both the district and his nominee. Were you talking about doing the one on the addendum in this as well? Okay, so have at it, Mr. Chair.
Thank you very much, James. All right, let's start with the Blackforth Slough Vern Zerm Conrad and Fisher Drainage District, Harlan Trotter. Fountainhead, Robert Barker. Current Compromise, Wayne Emkes. Lower Big Slope, Lowell Estes. South Fork, Richard Rice. Nelson Moore Fairfield, John Heiser. Okaw, Larry Dallas. Pesodum, Slough, sorry. Forest Brewer. Prairie Creek, Stanley Wolken. Ralph, Lester Wolken. Salt Fork, Dennis Bergman. Silver Creek, Cecil Hudson. St. Joseph 3, Charles Daly. Sommer 1, Troy Fleshner. Union Station in Ogden Township, Les Olson. St. Joseph number 4, Dwayne Goodwin. Triple Fork, Lowell. Oh, geez, sorry. West Branch, Stanley Woken. Willow Branch, Steve Maddock. Wisk, Stephen Hurritt. Kankakee, Patrick Finney. And number 10, Town of Ogden, John Emmon. Number 2, Town of Scott, Daniel Knoll. Pesodum Consolidated, Chris Hausman. Long Branch Mutual, Norman Yukin.
Second.
Have a second by Mr. Kibler. Second by Mr. Kibler. Did you get the ones on the addendum as well?
I did.
Okay. All right. Any discussion or questions regarding these? Ms. Petrie?
It's just to entreat our rural colleagues to help us fill out a number of those drainage districts that only have 2 members and don't have a full force of 3 members. And you all know the folks out in those areas so well that it would be really helpful to have that kind of suggestion and assistance for those drainage districts.
All right. Thank you, Ms. Petrie. Other comments or questions? Seeing none, all those in favor say aye.
Aye.
Any opposed, say nay. Passes unanimously. Next up, we have for the Dewey Community Public Water District, an unexpired term ending May 31st of 2018. Mr. Chair.
My appointment is Karen Hoogie.
Second by Gary Maxwell. Any discussion or questions? All those in favor say aye. Aye. Any opposed, say nay. Also passes unanimously. And finally, under the appointments, we have the Ludlow Fire Protection District unexpired term ending April 30th of 2017. Mr. Chair.
Appointment Rodney Lotion. Excuse me? Oh. Leshin.
Yep, seconded by Stan. Any questions or discussion? All in favor, say aye.
Aye.
Any opposed, say nay. That also passes unanimously. Next, I would entertain a motion to accept and place on file the June and July 2014 reports from the county clerk.
So moved.
Moved by Max Mitchell and seconded by Mr. Langenheim. Any questions or discussion regarding those reports? I don't think the clerk's here, so we can make it up if you have a question. Seeing none, all those in favor say aye. Aye. Any opposed, say nay. Thank you. That passed unanimously. Next up, from the Circuit Court, we have a request to send the Specialty Courts Coordinator position to the Job Content Evaluation Committee for review and evaluation.
So moved.
Moved by Mr. Kurtz, second by Mr. James. Any discussion regarding that proposal or questions? I'll remind everyone that we will see this again once the committee has reviewed it. So you'll get a second chance if you're worried. Okay, seeing no questions or discussion, all those in favor say aye.
Aye.
Any opposed, say nay. That also passed unanimously. Next, from Planning and Zoning, We have a request to send the associate planner position to Job Content Evaluation Committee for reevaluation. Can I have a motion?
Second.
Mr. Alex, seconded by Mr. Kurtz. Mr. Hall, would you like to join us and make any comments on this? Okay, so if you have questions, Ms. Petrie. Mr. Hall, why don't you come up and join us at the table there?
Hi, John. I'm on page 45, and it's the second paragraph, which relates what you're thinking about to the description for the RPC Commission Planner 2. And I have, I think a concern is the correct term, that it just says a master's degree and 1 to 3 years of experience. And I strongly urge that it says a master's degree in a related field. I could have a master's degree in classics, and, I mean, I have nothing against a master's degree in classics, but I do really think that it's important in a related field. Could be landscape architecture, urban planning, even NRES. It's pretty broad.
I think that's a good recommendation.
Okay, thank you very much.
I would just add that this is a recommended job description by the department head. It will be tweaked and worked on by the committee, and it will be finalized by the committee and brought back to you with the recommendation.
All right, Mr. Alex.
I think as a matter of policy, I agree that Ms. Petrie suggests something that'd be good to look at in the future on these job descriptions. If there's an opportunity to, avoid wasting our time interviewing unqualified people or wasting unqualified people's time responding to the solicitation, if we could say, this requires a degree in a related field or relevant experience or something, every little bit helps.
All right, any further questions for Mr. Hall or comments? Thank you, Mr. Hall. All those in favor say aye. Aye. Any opposed, say nay. That passes unanimously. Just a note, we have a member of the public who was late and missed our regular time, so I asked Mr. Kurtz to entertain a motion to suspend the rules between policy and finance to let that person speak. So that's when we'll address it. Moving on to another job content evaluation committee, we have a report back and a recommendation from the Child Advocacy Center, their forensic interview position. At this point, our motion would be to act on that recommendation. Is that correct, Deb? So I would entertain a motion to act on that recommendation.
Second.
Mr. Hartke, seconded by, was that Mr. Kibler? All right, any questions or discussion regarding this item? Diane, please.
Is this a new position, or this is something that they're just reviewing?
No, it's a new position.
Okay.
All right, seeing no further discussion, all those in favor say aye. Aye. Any opposed, say nay. That motion passes unanimously. Moving on to County Administrator, I would entertain a motion to accept and place on file the June and July 2014 Administrative Services Reports.
So moved.
Second.
Mr. Kibler, seconded by Mr. James. Any discussion or questions for Deb? Ms. Petrie.
Yes, it's just sort of a general information question. As I was looking over the health insurance benefits report for the 2 months, rather than going back and pulling out all of these reports from previous packets, is this about average of what type of benefit claims we have in the county? Are we spiking up? What are you seeing as the trend?
Well, this is just a reflection of premium paid, and it's based on the number of employees and dependent plans that our employees are enrolled in. The only thing that causes any fluctuation in this is employees coming and going.
Further questions, comments? Seeing none, all those in favor of accepting and placing on file, say aye. Aye. Any opposed, say nay. Motion passes unanimously. The next item on the agenda is some proposed changes to the county travel policy. This is a revision. I suspect it was started when we were updating year-end items, since we're changing the end of our fiscal year, but it evolved into a few other more housekeeping-like adjustments. I entertain a motion to accept these changes.
So moved.
Mr. Kurtz, second. Astrid, seconds. Deb, did you have any comments you wanted to add to what you've said so far?
Not really. It is truly just to clean up. There are some procedural things like including the word meetings so that people can be reimbursed when they go to meetings, not just when they're going to conferences or training. So just, and the year-end dates, and then just some other clarifications with regard to county board members and what they are reimbursed for. So that's all it is. If there are any questions, I'd be happy to take them.
Ms. Petrie?
I have a question that when I read it, it seemed to be a duplication, but I may not get the fine differential. I'm on page 58, under C, number 4, about payment to attend meetings and such. And then it is again mentioned, sorry, I'm trying to find this, on page 66, Article 12, number B, and that also addresses mileage. Is there a distinction between those two, or is that sort of a repetition?
Well, the first section you referred to has to do with use of personal vehicle. And so that was included in previous versions to ensure that while we don't reimburse department heads for attending, these meetings, county board members do get per diem. And if it weren't there, it might seem that they weren't supposed to. And then the second section you're referring to is a section that is for county board members only. So it is reiterated there with regard to the mileage reimbursement for attending meetings.
Okay, and then I have one other question. Is the final approval of this at the full county board meeting?
Yes.
Thank you.
Other questions? Oh, Chris, you had one, okay. All right, seeing none, all those in favor say aye. Aye. Any opposed, say nay.
Nay.
Okay, that passes, but will not be on consent. And then, let's see, the last thing that we have for policy is under the chair's report. You may recall that we started a 5-person committee to look at the strategic plan for a refresh. That committee consists of, I'm chairing it, Stan Harper, Jeff Kibler, Patsy Petrie, and Josh Hartke. We're going to take this piece by piece. And tonight, we brought before you the values, vision, and mission from the current strategic plan with some minor red changes to it that have been suggested after our first 2 discussions about the strategic plan. Our goal tonight is to make sure you're familiar with these items, that you've looked at them, and that if you have changes to language or particularly in the section where it says defining our values, if you see bullet points that don't make sense or bullet points that you feel are missing to add into it, we're here to ask you to give us your input on these items. We can talk about it a little bit right now if you want to, if you have questions. But the goal, there is no outcome tonight for changing these. The goal is to start your thoughts. Maybe if you have questions you want to talk about right now, talk about them and funnel that input into the committee and the committee will take that up at their next meeting at early part of September. Just to give you the kind of roadmap that I've envisioned for this is, we'll take care of this portion of it. We'll talk about it in August, and we'll go through a revision cycle into September. In September, we'll also bring you the goals and initiatives that were on the previous instance of the strategic plan, I guess, the current strategic plan, for lack of a better description. And we'll ask you to look at those and give us feedback and start thinking about adjustments to goals, to initiatives, whether they're new initiatives, whether there are things on there that you think we've done, whether there are things on there that you no longer think are strategic, maybe. In any case, we'll have another iteration in September and October for those kinds of things, and I'm hoping to have in October a study session where we can come together, talk about those goals and initiatives, let people advocate for the things that they think are important, and then do some ranking. And then hopefully in November, we'll have a new framework of a strategic plan that we can address in the COW and then vote on at the end of November. So, starting with vision, mission, and values. Diane.
Okay. I just had a question. I think you might have alluded to it, that these really aren't ranked in any specific order at this time. One thing that I noticed is that, we really are responsible to the public. To me, that was kind of a first, but if this is just general and you're going to put them together and rank them out down the road later, which I think is what you said?
I will say that we had a brief discussion about what order the value should be in, and I think it'll be a very long discussion when we try to finalize that. This order was a suggestion from the idea that we take our diversity, put our teamwork together, and our responsibility to the public is to bring justice and improve the quality of life. So it's kind of a story it's being told through those 5 values, which does not mean one's more important than the other.
Yeah. I guess I just didn't see that based on the bullet points underneath
Yeah,
some of the items, and maybe that's what we'll expand on later on.
could be. If you've got ideas about that, you can either talk about them now or send them to us on the committee.
Okay.
Yes, Ms. Bergson.
A lot of us would feel that justice is the primary one, and all the rest are really corollaries of that. And yet you've dropped it from 3rd to 4th.
Thank you. Any other comments or discussion? Mr. Alex?
Just a couple of things that jump out looking at this. One is, and this is probably under responsibility of the public, I don't see much of a nod here to sort of long-term, we talk about critical thinking, but I don't see much that speaks to sort of long-term planning, long-term strategic planning, taking the long view. And the other, which could be couched as a issue of sustainability, or it could be fiscal responsibility. I don't know exactly how you want to tie that in, but some idea of, being responsible for the long-term stewardship of the county. And the other thing that sort of jumps out as an absence in the quality of life is providing transportation options and infrastructure, which I think would speak to some of the rural transportation efforts that we're doing, maintenance of highways, bridges, providing safe and long-lasting infrastructure.
Thank you, Mr. Alex. Like I said, we don't have to beat this out here tonight, but I would like your commitment to think about this and drop me a note which either says, I don't have anything to add, or list the things you'd like to see addressed by the committee in their next meeting. Everybody going to do that for me? All right, thank you. For consent, of the things that would go to the full board, I only have F2 as not being on consent. I finessed that. Thank you very much.
Thanks, James. I'd like a motion, please, to suspend the rules for public participation came late. So moved by
Second.
Chris, second by Aaron. All in favor? Aye. Motion carries. Thank you. Ms. Nellifor Chambayati? Press the microphone, please.
Yes.
You turned it off. There you go.
I want to say that I really appreciate this because I may not be able to come back for a while. So this is a good opportunity for me. I'm Nilufar Shambayati. I've been here before, but not for a while. I would like to address some problems that I see with the county board having approved the study of a master plan for not a new jail, but in addition to the satellite jail. And I also wanted to clarify that I'm very concerned about the welfare of the inmates, and that's why I keep coming here. So when I say that I'm against this master plan at this point, it's with consideration of what is best for people in our community. And I would like to argue that the money that has gone into studying this master plan is misplaced. We could have had a much better uses for that. And as I recall, if I'm not mistaken, this fund has been reallocated because it hasn't been spent on pretrial services. So I would like to just go over this. The decision to hastily accept to fund a new study and spend millions of dollars of taxpayer money is irresponsible and entail many problems. It is always easier to fund jail construction to deal with overcrowding and meeting the so-called needs of the inmates than to develop plans to reduce the population of inmates without endangering the safety of our communities. This is mainly because of the respect we lavish on our highly positioned officials in the criminal justice service, and also because it's a much easier route to take. It doesn't require immediate supervision or complicated planning. So we usually take the shorter directions, shorter road. However, there are some problems that in the long run would hurt all of us, board members, community, etc. Study after study has shown the destructive impact of imprisoning people who have committed nonviolent offenses on communities and individuals involved, while diversion and assistance have proved to work better than incarceration, even when attempts are made to address the so-called needs of the inmates. Here I point to other kinds of problems which makes the cost skyrocket, because there are the other main problems are in the studies and in ILPP study that was done. So the problem that I see, not that it's reduced to this, is that maintenance of buildings can easily be neglected. Examples are of downtown jail and also cracks on the exterior of the satellite jail that has been just left alone. And also, in general, maintenance of buildings is very expensive. So it's not just building it, but all the other expenses. To hire additional staff also adds to the ongoing costs. And one last thing, I'm not making any accusation, I'm just citing some studies which say that the construction industry is the most corrupt among all industries in this country and worldwide. especially when government projects are involved. You can read about it online, and I have a short study done that I will distribute. And it's very difficult to detect any wrongdoing in this business. I'm just saying that by not constructing a big project, not funding a big project, we can avoid potential problems. And what I suggest is that the members of the board to reverse their decision and then
Champagne,
follow, pardon me?
I'm sorry, your 5 minutes are up.
5 minutes is up.
Thank you
That's
very
fine.
much.
So I have if I can add, I have some suggestions here.
Why
So
don't you
can
just
I
hand those suggestions
distribute?
out
That's what
to
I
the
was
board?
going
That'll be fine.
to distribute it
Thank
among
you.
the members.
Okay.
I really appreciate this opportunity.
All right, let's move back to the board. We have finance next. Chris?
Okay, welcome to the Finance Committee. Our first item will go straight to the County Administrator's Report. We have Elizabeth Hennessy here to discuss proposed refunding of Champaign County Series 2005B bonds. So if you'd like to step up, Deb, I don't know if you want to introduce Elizabeth?
Elizabeth is with William Blair, who has assisted us with all of our bond issues over the years and is bringing forth a recommendation. You all have copies at your desks of the presentation on the potential for doing some bond refunding.
Thanks, Deb. I have extra copies if anybody needs them, but I think you all got the copies distributed in your packets. So if you'd bear with me, I'd like to just go through this presentation, first updating you on the market conditions. So this page 1, you see the blue line is our 20-year AAA Municipal Market Data Index.
To use the PowerPoint, or are we going to do it off the, okay, we're doing it off the,
Do you want me to do it
off
up
the
there,
sheet?
too?
Okay, that's fine.
Okay.
We weren't sure. We saw it light up. We thought it was, you were going to do PowerPoint.
Okay. Is everybody okay with just following along in your books? Oh, that's great. Okay. Thank you. Okay, so this shows interest rates from July of '09 through July of 2014. Do you want to put it up?
It's not on there, right? You didn't,
I didn't bring it
no,
on a
it's fine.
clip.
It's fine.
Okay. Okay, sorry. So as we look at this graph, what we see really in the last 6 months, despite expectations otherwise, interest rates have actually come down. And in the last weeks, as we see hostilities overseas increasing, that causes market participants to do a flight to quality, meaning buying treasury bonds. The demand for treasury bonds makes interest rates lower, and municipal bonds follow that trend. So we're really in a very wonderful time in the bond market in terms of low interest rates, low borrowing costs. If we go to page 2, what you see here is your municipal yield curve. This shows interest rates from years 1 through 30, and this tells us that the very lowest interest rates are those in the short term. The green line is where we are now, and you can see we're just above the blue line, which is the lowest interest rates have been over the last 7 years, and that occurred in 2012. Next section refunds outstanding debt. I've separated the bonds into the different types. The 2010A, starting on the left side of the page, those are general obligation debt certificates. The shaded area are the callable maturities, and the callable maturities are the ones that are eligible for refunding for savings, okay? Moving across the page, we've got the debt paid from general obligation taxes, starting with the 2011 bonds. Those refunded the Series 2003 referendum bonds for savings. We've got 2005A. And the 2003 in the blue, those have already been refunded for savings. If we go to page 4, we look at bonds payable from the public safety sales tax. These are alternate revenue bonds. So we start with the 2007A bonds, and you can see that those are callable on January 1, 2017. That's just 2 years away. We're going to talk about those in a minute. Then next, we have the 2005B bonds. Those are callable January 1, 2015, so right around the corner. This is a bond issue where you have some good opportunity for savings coming up immediately in the next couple months. Then we have the alternate public safety bonds, 2000B. Those are just remaining bonds that are non-callable. And then the remaining 1999 public safety sales tax bonds, which the blues have already been refunded and the black is non-callable. Going to the next page, we look at bonds payable from general sales tax. So this includes the 2007 Bs and the 2006 As. We're going to talk about those. That call date is coming up January 1, 2016. So that's just about a little more than a year from now, even though it's only 2.5 million of bonds. And then last, you have one more payment on the 2006 bonds. Okay, so that's just a review of your outstanding bond issues paid from the different revenue sources that we've discussed: general obligation taxes, public safety sales tax, and general sales tax. So the bonds eligible for refunding, if we go to page 6, are the Series 2005B bonds. Those, again, the call date's coming up January 1, 2015. And just a little background, general obligation bonds, unlike your home mortgage, are not callable at any time. With your home mortgage, you can go and refinance any time and do it multiple times. That's not the case with bonds. Bonds are callable, or you're able to refund them either before the call date. You can do that once on a tax-exempt basis, and then again at the call date. You can do it multiple times, but at the call date only. So that's why we look very carefully at these call dates, because they do represent opportunities to refund bonds without setting up an escrow and doing it in advance of the call date. Okay, so the 2005 B bonds are callable Jan 1, 15. 2006 As are callable Jan 1, 16, and the 2007 As are callable Jan 1, 17. So those are the three opportunities we're going to look at tonight. Now, bonds may be refunded on a current basis up to 90 days before that call date. So as we look at that Jan 115, we'd like to see, to take advantage of that, do the refunding within 90 days before. So we're ready to pay off those bonds at the call date and have the new bonds at the lower interest rates take their place and provide savings to the county. The other thing to consider is that when you issue less than 10 million of bonds in any calendar year, the bonds are bank qualified, meaning banks get an extra deduction of interest from the federal government for purchasing bonds of small issuers. And again, small issuer defined by issuing 10 million or less of bonds in any given calendar year. So we're going to look at those opportunities as well. All right, so if we go to page 7, here's the refunding of the 2005 B bonds. And in the blue chart, we've got the current debt service on those bonds, which totals $18.2 million. And if we replace that with new refunding debt service, that totals $16.3 million, and the final maturity being 2029. So we're just not extending the maturity, we're not shortening it, we're keeping it exactly the same term, and that produces savings of $1,884,000. Okay, so that's about $103,000 to $130,000 a year. So this is savings on your public safety sales tax that you then can, budget for other things.
Excuse me, Ms. Hennessy, Ms. Schwartz?
What would be the cost of this refunding?
The costs are netted out here, so your savings are net. Usually you can estimate the cost to be about 1.25% of the par amount of the bond. So for bond counsel, disclosure counsel, rating, underwriting, all those things might total approximately $125,000 to $130,000.
Okay, and the second question is, I would expect these costs to come up front, so I'm surprised that 2015 actually has the highest savings of all years. How does that work?
Well, the cost of issuance are paid out of the bond proceeds, so they don't come out of the first year's payment. They come out of the new money proceeds. So we issue bonds to pay off, let's say, just about 12 million of bonds that are callable on Jan 115. Okay, so then we also issue about 120,000 or extra. The issue gets a little bigger, so it's amortized. The costs are amortized over the life of the issue.
And why is the savings so much larger in the first year?
I think it's just because that's a partial year where we're refunding the full interest payment from fiscal year 2015, but we've only got a half a fiscal year to pay on it. That's why. Now, this issue for 2005B is right now showing you savings non-bank qualified. We'll also look at it if we shave $2 million off and do that the next year, but then we'll have less than 10 million in 2014 and less than 10 million in 2015. So each piece can be bank qualified, saving on the interest rate. But we have to look at that versus the cost of doing another issue in 2015. So we'll provide that analysis as we get closer.
Ms. Michaels?
This might be a real simple question here, but the 10 million, that's not an aggregate total of what we are doing, that is per issue, correct?
Per issue, so issuance of 10 million or less per
Right.
calendar year, right, as opposed to what's outstanding. The other thing I wanted to point out is we look at these savings, which as you can see total $1,884,000. We look at the present value of those savings. So if you take these cash flows and discount them back at the average rate to about 3% or on the bonds, you get a net present value savings of $1,276,000. The ratio that we look at in the public finance world is those present value savings divided by the par amount of bonds we're refunding, which is about 12 million. And that gives us a ratio here of 10.98%. That's kind of your bang for the buck indicator. Whenever that ratio is over 3%, in the public finance industry, we look at it as a good opportunity to refund bonds, and as you can see here, it's well over 3%. It's at 10.9%. So that ratio tells us that, you know, this, compared to other refunding opportunities, is very good. The next page, 8, looks at refunding the 2006A bonds, which are not callable until January 1, 2016, if we did that now in advance of the call date. And what this shows you is the savings. They total $85,000 over the period, but the savings are very small each year. They're under $10,000 a year. And then we look at the net PV savings at the bottom. It's only $77,000, and the net PV savings as a percent of the refunded bonds is just barely over 3%. So in my mind, this isn't a great opportunity. But if rates stay the same as they are today, let's go to the next page, and we wait till that call date, which is next year, January 2016, we have almost double the savings. Now, you can see the savings is about $191,000 here, and the PV ratio is 6.85%. So that's much better. But the risk we have about waiting from now to next year is that interest rates could go up. So the question is, how much do interest rates have to go up to make you better off to do the advance refunding now versus waiting a year from now? And the answer to that is 0.68%. Okay, so I don't know what you think about future interest rates and what the likelihood of them going up. I mean, we've had the Fed say that they're looking at maybe raising interest rates 0.25% in 2015, the first or second quarter. This is 0.68%. So, you know, if we see a fiery, wonderful recovery of our economy, this is possible. However, we've been waiting for higher interest rates for, you know, 5, 6, 7 years now, and they really haven't happened. And kind of the unrest that we're seeing globally does keep interest rates down too. So my recommendation on this is to wait and see how it goes, and hopefully we'll have those higher savings on this one at the current call date next year. Page 10 looks at refunding the 2007 A's. Now, there are no savings on the 2007 A's, refunding them now. Okay, so I didn't even show you that option in advance of the call date. But if we wait for 2 years from now to the call date on these, which is January 1 of 2017, the savings are very good, about $302,000 over the life of the bonds. And that ratio, that net present value savings, is 7.17. So that's, again, a very strong ratio. Now we also have the risk of waiting 2 years and seeing what happens with interest rates. So, you know, we actually have no choice but to wait on this one because there's no savings now. But we'll just continue to monitor this for you, and hopefully those savings will be there for you as we get close to that call date in 2017. So in terms of debt planning.
I'm sorry, Ms. Hennessy, Ms. Schwartz, sorry, I didn't see you there.
I'm sorry. Yes.
Since we will probably have to issue significant amount of bonds for the jail, how would that affect our interest rates? I mean, obviously it would affect the risk of the county, so it would affect credit rating, and credit ratings tend to affect not market rates, but our rates, insurance rates and so on. Do you have, I mean, I know it's not.
So your question is, how will issuing bonds for the jail affect the county's
I
credit
think
rating?
it's pretty clear. It will increase the rates. Not necessarily the market rate, obviously, but.
It'll increase, obviously, your debt service, right?
So those calculations ignore that, correct? This is based on
We
today's.
do not take into consideration any additional bonds for
Okay.
the jail in these scenarios. So we're
Okay.
just looking at refinancing for savings.
Assuming, I mean, a different way of saying that is assuming we would have never issued additional jail bonds. These numbers are correct if we would never issue additional bonds.
If I'm sorry, if I can jump in here, if I am hearing Ms. Schwartz's question correctly, I'm not sure you are. The question is, if the county were to borrow additional money for anything, would that affect the rate that we were able to get on refinancing these other unrelated bonds?
No, not unless your rating was downgraded for some reason. You have a really strong rating of AA2. The county is a very well-rated, financially strong county. So, in issuing bonds for the jail, I don't think would negatively affect that, assuming you issued them in a responsible way where the amortization of the jail bonds does not exceed the average life of the debt, and that you, you know, presumably would use some sort of public safety tax or something for the jail bonds, and that it fits into your financial projections. So, you know, I don't think you do anything irresponsible that would jeopardize your rating. So assuming that you issue them within your revenue constraints, matching the average life of the asset financed, it should not negatively affect your AA rating. So these savings that we're talking about here should be about the same, whether you issue the jail bonds or not. Is that, did I get it?
I think that is the answer that
The
you were
essence of the
looking for, right?
question. Okay.
And I feel obligated to mention, we have neither a jail project nor the money to pay for a jail project nor the revenue stream to bond a jail project right now. So discussion may be premature, but it's a good question to know the answer to.
Right. Right. Okay, so just in terms of debt planning, the proposed debt plan would be in November of 2014, do the current refunding of the 2005B, then come back in November 2015, and we'll review the bank-qualified refunding of the 2006A bonds, and then the following November, the 2007A bonds. So This kind of maximizes your bank qualified advantage if you did have to fit a issue for jail bonds in, 15 or 16, depending on when and if any plan does materialize. Those smaller amounts in 15 and 16 allow for you to issue more bonds under the bank qualified limit. And waiting to the current call date to refund these bonds in this kind of debt plan allows you to reduce any costs associated with the escrow of refunding in advance, taking advantage of market rates and providing savings to the county. So the rest of this presentation is just about our firm, which I'm happy to answer any questions. We've had the pleasure of working with the county since 1999, but in this case, let me just stop here and ask if you have any other questions.
I guess I would ask you to go to your last page, which is about the schedule.
Yes.
And just touch on the calendar schedule. And Ms. Schwartz?
The
what you were gonna
financing
ask?
schedule shows that the Board Finance Committee discussing the plan tonight, and then assuming that you're in agreement with the savings and moving forward on the 2005B refunding, we would bring a bond ordinance to County Board on September 18th. And that's a parameters bond ordinance that authorizes the refunding assuming certain savings targets achieved and appropriate market conditions. The beauty of a parameters resolution is it allows the underwriter to hit the market at the most opportune time in case, September 18th happens to be a difficult market day. So that gives us flexibility. We would then prepare the offering statement. The preliminary official statement is what that is called. We would secure the bond rating with Moody's Investor Service and perform the due diligence functions, and then sell the bonds in late September, early October, depending on market.
Okay, I guess, Ms. Schwartz, did you have anything else?
Yeah, do we ever have an intention to issue more non-callable bonds? I'm particularly worried about the ones we issued at some exaggerated rates, which ended up with a premium loan. I understand that. We borrowed a lot more than the face value, but that basically ties the hands of future boards to do anything about it. No, and I understand that our ordinance can specify in our parameters, nothing should be non-callable, nothing should be excessively
Yeah.
above market, but just in
Well,
terms
the
of...
standard call feature is 8 to 10 years of call protection, so the bonds that are due after 10 years would all be callable. So on these 2005 Bs, I think they start to mature around 2024, so that's 10 years out. So the majority of them would be callable.
Right, but the 1999 bonds at 8.25% are non-callable. That's
Right,
an
but
eyesore.
those were special premium bonds, and if those were made callable, the cost would have been prohibited to the county. And those were structured in that particular structure to allow the cost of issuance to be paid out of that particular part of the structure.
I understand that. I don't think everybody on the board understands what a premium bond is, and so when we approve a par value, and so people have the impression that they, let's say 10 million, I'm just throwing an amount, that they borrow 10 million. They don't understand that at a premium, you actually borrowed 13 million. And so I understand what you're saying. I don't think it's a good practice for a government body of our type.
I would concur. I mean, I think I would, if I had been on the county board at that point, I'd like to think I would not have voted in favor of that particular strategy. As Deb says, there's a reason. There's always a reason. I guess if I can rephrase the question again, we really don't have the option of instruments that are completely completely callable, right? I mean, in general, municipal bonds are able to achieve the interest rates they are because they're providing a guaranteed rate of return for some period of time.
Correct. It would just make the interest rate higher, the yield higher, and the savings less if you had them callable at any time, like a mortgage.
I think I'm okay with a 10-year. What I'm not okay with is something that's never callable and at a premium rate. And if we do have that, and I understand there is a reason, I think it should be disclosed in bold capital letters, so everybody on the board, even if they don't want to, would absolutely understand what they're voting on. That's all.
I couldn't agree with you more. Any other questions for Ms. Hennessy while we have her? Seeing none, I guess at this point, we don't have formal action requested on this, but I'd like to get a sense of the Finance Committee, if there's any objection to proceeding. If there's not, then we'll go ahead and direct Ms. Busey and Ms. Hennessy to work to bring us a bond ordinance. Ms. Petrie.
I don't do this every day, so could I ask a couple of clarification
Sure.
questions? Thank you. Based on what I think I have in my head from your explanation, the way you want to set this up is, first of all, so you have some flexibility to hit the market at a prime time. Is that correct?
Yes.
All right. And so you hit the market and you think you've really done very well, but there's a huge shift in the market. Do I understand that you have another opportunity to do a second selling and rebuying of bonds after the call date? I'm not clear on that one.
Yes, so let's assume we proceed with this issue.
Right.
And it's all done. And by the way, one thing I didn't add about the parameters ordinance, it delegates typically the county administrator, board president, and chair of finance. Really, you can choose part board representation, part administration, to give the final okay on the sale of the bonds. Okay, so there is
Checks and balances.
Checks and balances.
Okay.
And then your question is, once the bonds are issued, would we have an opportunity, would the board have an opportunity to refund them again in the future? And the answer to that is yes, but it probably would not be for 8 to 10 years.
Okay. Oh, that long. All right. Thank you.
So I'm going to go around the room. I guess seeing no objection, this seems like something we can move forward with. Obviously, there are significant potential savings here that we definitely want to look into. So please proceed and bring us a bond ordinance.
All right.
And thank you for being here.
Thank you very much.
Okay, we'll continue with the county administrator's report. Deb has provided her general corporate fund fiscal year 2014 budget projection and budget change reports. I would ask that those be accepted and placed on file. Moved by Mr. James, second by Mr. Kurtz. Deb, any comments?
Well, at this point, the projection, if you look at the summary page, actually looks worse than the budget on paper looks, but we're projecting about a $1.3 million loss. The continuing decline in fees is a large contributor to this. You see it about 2/3 of the way down, general government fees on the revenue projection. It's documented and acknowledged. I received a report from our circuit clerk in the last couple of weeks indicating that the clerk's fees alone are down approximately $300,000 over where they had previously been. There are a number of reasons for this, but when the clerk's fees are down, then typically the state's attorney's fees are down, the sheriff's fees are down. So, and we were projecting increases in fees because we did also build in some fee increases into this year's budget. So that's really what we're looking at on the revenue side. Everything else is fairly reasonably stable. And on the expenditure side, spending has picked up in the last couple of months as compared to where it had been. We were projecting 99% of the budget would be spent at this time this year. But as you know, with the 13-month budget, we always projected that we would end this fiscal year with a deficit, and even with this projected deficit, we end at a 12.6% fund balance, which is within the goal that we've had established for the fund balance for the general fund.
Thank you, Deb. Any comments or questions for the county administrator? Seeing none, all those in favor of accepting the report and placing it on file, please say aye. Aye. Any opposed? That motion carries. Moving on to the treasurer. The treasurer is on vacation, but may I have a motion to accept and place on file the June and July treasurer reports? Moved by Mr. Harper. May I have a second? Mr. Jay. Any discussion of the treasurer's reports? Seeing none, all those in favor, please say aye. Aye. Any opposed? That motion carries. We have a resolution authorizing disbursement of funds on a defaulted contract for mobile home tax sale, permanent parcel number 14-019-0102. May I have a motion? Moved by Mr. Kurtz. May I have a second? Seconded by Mr. Esri. Discussions, comments, questions? Seeing none, all those in favor, please say aye.
Aye.
Aye. Opposed? That motion carries. We'll move on to the auditor's report. May I have a motion to accept and place on file the auditor's June and July
Second.
2014 reports, Mr. James and Mr. Kibler. Thank you, I didn't see you. Mr. Auditor, floor is yours.
Thank you. Does anyone have any questions on the monthly reports? You have your June and July report, since we didn't have a Finance Committee meeting during July. One number that I'd like you to take a look at, and remember, these are actual numbers that have gone through our system. I always look at the nursing home numbers. Nursing home revenue continued to runs ahead of their expenditures, and that number has fluctuated somewhat. Back in April, it was around $220,000, went up to $280,000. There was an influx of cash there in May and June. It was up to almost $775,000 difference for a while. It's back down to about $560,000 this month. So just, that's one number that I like to watch from month to month. And remember, those are actual numbers that have gone through the system. We don't know what bills they may be holding on to or have forthcoming, but it's a good number to watch.
Thank you. Any comments or questions for the auditor on this June and July report? I see none. All those in favor, please say aye. Aye. Any opposed? That motion carries. We'll move on to the quarterly financial report. May I have a motion to accept and place on file the second quarter 2014 auditor's report?
So
Mr.
moved.
Kibler and Ms. Bergson.
Any questions on the quarterly report? That is, of course, the report that I first brought to you earlier this year, and it basically shows where our major funds stand. And then we also have our, what I consider to be somewhat interesting facts here for the general public and for board members, our top expenditures and revenues as we move through the year. Again, looking at the nursing home, we always love to look at the nursing home. The contract nursing number is one that we're always asked about. And so through the end of June, the contract nursing was running a little behind where we were in 2013.
Ms. Petrie.
Hi, John. Thank
Good
you
evening.
for coming. On page 74 of our packet, which is in reference to your quarterly financial report,
Okay.
it was just sort of an observational comment that I made at caucus, and you might be able to shed some more light on it. On the right-hand column, the first section, which is top 5 expenditure lines fiscal year to date, on full-time employees, there is a differential there of almost $600,000. And then if you go down to the next section, top 5 expenditures for general corporate fund, again, full-time employees, that differential is, at about $400,000. And since we do these, raises and contracts and things sort of in a siloed way, this sort of gives an overall picture, but that's a good jump in amount in the year. Can you sort of run through what might be causing that?
What causes the jump?
Yeah, the huge jump. Is it raises, is contracts,
Well, you have-
hiring new people on the staff?
A combination of all of them. We also had, let's see here, we've picked up programs like Workforce Initiative. This is the first full year we've had those employees in there.
Okay.
So it can just, it's all different matters of employees go into that line. That's your big pot of money for employees.
Right.
So if we're running at full staff, it's going to run ahead. If we had vacancies,
Okay.
and we've had people hired in the last year.
All right, thank you.
Sure. And we can always get details on that for you if it's something you'd like more information on. I'd be glad to try to find it for you.
Thank you.
Sure.
John, a question I had was whether we know that there's the same number of payrolls in the first 2 quarters in 2013 and 2014.
Thank you. That's another thing that I always forget about. I miss that from time to time where you might have an extra payroll in there. And with this being the 13-month, that also adds to it.
I didn't know if there was an extra payroll or not, but that could have been
I
one of the
think there is,
issues.
actually.
Okay.
I think we are one payroll ahead this time.
Because I know we've had small salary increases. I know we've added some positions, but I didn't think we added $600,000 worth for half a year.
I'd be pretty certain we have an extra payroll in there.
Okay.
Yeah.
Thank you. Any other questions or comments on the quarterly report? Seeing none, all those in favor, please say aye. Aye. Opposed? That motion carries. Moving on to your popular report.
This is something new for
Actually, I'm sorry,
Champaign
John, let me get a motion to accept and place on file the new auditor's popular annual financial report. Ms. Michaels, seconded by Mr. Mitchell. Please proceed.
All right, thank you. This is something that is new to Champaign County, and it hasn't really been around in the government finance offices for a very long time. It really came to be popular in the early 90s. I only know of 2 other counties in Illinois that do this report, McLean County and McHenry County. And so I worked with the auditors in those counties to work on this. And this is a very basic financial report where we hope that the general public will be able to understand. There are always things that you as board members need to know, and that's the more detailed things, so you can run the business of county government. But then the general public want to know the basics of it. Where's the money going to? When I write that property tax check twice a year, what are you doing with my money? It's kind of funny, one of the things, let me just kind of briefly go through a couple of the pages here. Of course, there's an introduction and some information about Champaign County. That's always good to have. The very first chart that I have deals with where your property taxes go. When you write that large check, where does it go? And a lot of people just assume that when you're writing the check to the county's making all sorts of money off of you. And Dan Welch has angry people come into his office left and right twice a year, and he forwarded me some of the emails that he received this year, and I don't know how he can sleep at night knowing that he is such a bad person. And I can say that because he's 2 time zones away right now. Did you? And you need to work on your spelling, Mr. James. But as you see, really, K-12 school districts are, of course, the #1 place where your property taxes go to. And Champaign County, we're, being good stewards of the dollar, we only take 9% of your tax bill. And so it's important that people realize that when you write that check, especially folks here in Champaign-Urbana, we have additional districts that we pay into, mass transit, public health, things like that. That way they can see the total value of their dollar and where it's going. I believe.
Mr. Quisenberry.
Yeah, I was, Mr. Alex actually walked me down this path, but I'm going to make this comment. This chart is kind of listed as the average tax bill, but I'm sure there's people around this table that if they look at their tax bill, they're not paying anything to cities or villages. Right. And so, what's it mean? In Urbana, that's true for me, but it's probably more like 10% or 12%.
Right.
Right.
And this is where we had to take we look at all the pictures, all the taxing districts in the county and try to come up with a snapshot.
I guess I would just suggest that the language you use around these charts it's not the average person's tax bill. This is an average of the tax bills, right?
Okay.
Sure,
I see what you're saying. Absolutely.
Thanks.
Sure.
I would actually go farther than that and say it may actually be worth having 2 charts. One that is for like residents of cities and villages, and the other that are
rural in the rural areas.
Because
unincorporated versus incorporated.
Because they are pretty fundamentally different. And I think this both underestimates. I think this is sort of misleading to both camps. I think people in the municipalities, because I know my tax bill doesn't look anything like this.
Mm-hmm. Right.
And I think it might be more. I don't think you have to break down, every jurisdiction in the county, because there's hundreds of potential combinations. But I think one that is, either like Champaign, Urbana, Savoy, Rantoul, and rural or something, and municipal residents, non-municipal residents, might provide a lot more clarity.
Sure.
I think this report is terrific, and I think I sort of just...
And that's exactly the type of comment I would love to have from board members. Please email them to me, because this is developing, and I want to do this every year.
And I sort of object to your comment that, the county board consumes this stuff on a deeper level, and this is more for the general public. As far as I'm concerned, this stuff is extremely useful for county board members, both when we're explaining things to the general public, and because, no county board member, no matter how interested they are in municipal finance, is going to digest, the entire county budget. So having something like this that you can flip to immediately is very useful to us as well as to the public.
That's what I want to hear. Yes.
I understand what they're saying, but I look at it strictly, as you said, as an example, and if you make it look too good for the rural areas, they'll find some way to tax us more, so leave it as is.
Let's move on to the next page with that comment. This goes strictly to county information from here on out. And so we have the county revenues and where we get our money. And when we do our reporting here at the county, intergovernmental revenue, that includes all the money that we get from the state, from other municipalities, people that have contracts with the sheriff's office, animal control, things like that. Our income tax, the part of income tax that we get our share from the state. So that's why our largest share is in intergovernmental revenue. Federal grants go into that area, so your Head Start money, things like that.
Mr. Quisenberry?
I think it would be worthwhile to break out the state
Okay.
of that one as its own item.
It's such a large area, it
It
really
would be
is.
most of it, I understand
Sure.
that, but what we get from all the other smaller contracts is small in comparison.
You know, and I think maybe even state and federal, quite honestly, because we do get a lot of federal revenue, especially through the Head Start program, because that's a large area. So the next page, expenditures. Looking at, of course, justice and public safety being the large area. And so we explained a little bit about where those monies go to.
On that point, it would be interesting to know, just because you're looking for ideas, which of these are completely funded by federal and state dollars versus what the county is paying for out of its own pocket. So I know a lot of the items on here will be fully funded by federal and state programs.
That's a great question, Jeff.
Ms. Schwartz, did you have your hand up?
Yeah, I would just specify debt service is something that most people don't know what it is, just to say it's interest and principal. And on the same line, when you go to, I know you're not there yet, but when you go to the balance sheet or net position, actually, you only have the principal there. Not you, I mean, this is how it works.
Right.
And considering what interest rates we paid, how much it is over years, if you add the interest, people think, oh, it's just like if you add 2%, that's about it. Well, it's not.
It's not,
It's
exactly.
about 50 to 60% total over years, obviously. So I'm not suggesting we change the balance sheet, but when you have the footnote and you say long-term liabilities include
explain
capital
that.
lease and so on, to say, and also just the principal part of the debt, and you can also say, and if you add the interest, because honestly, we cannot refinance, it's not like you can get rid of the interest.
Right.
So as far as we're concerned, this is a fixed obligation, short of refinancing we talked about today. But in general, those are monies that will have to be paid. So I would, you
Sure.
can't change the balance sheet, but where you have the footnote.
But we can have it in the footnotes,
Yeah.
absolutely.
And since I'm already talking, why did we call it popular?
That's what the Government Financial Association, Officers Association calls this type of report.
Really?
Popular compared to the comprehensive, yes.
Meaning
that's
for the people,
their terminology.
for the people.
Yeah,
Yeah.
I know, but,
Well, I know all the
kind of
popular kids like
cheapens
to
the
read
value of
government
it.
reports, right?
okay, thank you.
It'll be flying off the shelves by next week, I promise.
We take a snapshot of the nursing home, and we talk a little bit about where their revenue, and of course, I always find interesting the charges for services and seeing where our mix is coming from. And so we take that information and show people that, private pay is really a very small part of our nursing home when you look at the big picture. And of course, personnel is the number one expense, as should be expected at the nursing home.
John, would it make sense to break down the big green thing into the different the pair mix? I don't know how many, I mean, it's.
Yeah, that's something that I can
Given
very
how,
easily
given
do.
it's most of the pie chart.
Sure.
It might be more useful visually for people to get a feel for the pair mix.
Sure.
I mean, I'm reluctant to say that because on the one hand, I like sending the message that most of the nursing home's expenses are covered by revenue, right? I look at this and I think, oh, wow, the nursing home really doesn't, most of the nursing home isn't supported by tax
Right.
money. But on the other hand, I think a pie chart would mean a lot more to me than the column of numbers.
Sure. The next page is the statement of net position, which really shows you at the end of the day, where does the county stand? Are we positive? Are we negative? And this is information, again, that is looked at by most people say, are we in a strong position? And of course, Champaign County is in a strong position right now. So that's what that chart shows us.
Since this was an issue that came up in the press recently, the issue of things like vacation day payouts, separation payouts and so forth. Is that reflected in the long-term liabilities? I would ask a similar question about pension obligations. I mean, most of those are in IMRF.
I think they are, yeah,
So is that, those
Yeah.
pension obligations are part of the long-term liabilities
that's right.
on the balance sheet?
Yes,
Okay.
yes, they are.
Just thinking, Rachel got me
Yeah.
thinking about, are there other,
It had-
are there
I
other
had to
sort
make
of,
sure, yeah.
sort of off-the-book liabilities like,
Right.
like owed bond interest that aren't
And
reflected here?
starting next year, there's some different ways that we have to report those that will make things much clearer as we implement new government standards. And next year is when those really go into full effect.
I look
and so
forward,
I
to,
wouldn't be
look forward to
surprised
seeing
if-
how the state deals with that, incidentally.
Yeah, I think on the
state.
pensions, what you don't see here is what's funded and what's not funded. I'm not really
Right.
interested in what's your pension liability, I'm interested in what you didn't fund. And I think that's what you're talking about. that
that's exactly
Starting
right.
next year, that's really what you're worried about.
Yeah, I
If
mean,
you have-
we stress that IMRF is in substantially better shape than most of the state's pension funds, but it would be
Right.
useful information.
And that's because they tell us, this is what you have to pay us, and we have no choice, we have to pay it, which is, yes, shocking. So the next page is, this is more statistical information that we take directly from the CAFR, and it shows, the economic outlook, what our assessed property value has done over the last several years, and then what the unemployment rate around here has done. And as you can see, things have leveled off over the last few years. The next page, government accomplishments. I just listed some of the things that offices shared with me that they're proud of, and we took information from both the budget and from what they've accomplished over the last year and mentioned that. And then we have your names and the officers' names. And finally, some contact information for the different offices. Shocking, isn't it? So anyways, this report, honestly, this was fun for me to go through and compile. And I would truly love your suggestions for things that we could add to it, because I intend on doing this as long as I'm in that office, because it's just a nice service to offer.
No, I think this is great. Mr. James?
Diane just said it, and I think it hits home. The simpler it is for the public, not saying that they don't want the information, but you make it too wordy, it'll end up in file 13.
Right.
Any additional questions or comments on the popular annual financial report? Seeing none and hearing Rachel chuckling at the name. All those in favor of accepting it, placing it on file, please say aye. Aye. Any opposed? That motion carries. Thank you, sir. I'll move on to the nursing home monthly financial report. May I have a motion to accept it and place it on file? So moved. Moved by Mr. Stan James. Second?
Second.
I'm sorry, did I miss a second? Al, seconded by Mr. Kurtz. I did miss him. Seconded by Mr. Kurtz. Any discussion? Mr. Maxwell is our sole liaison present at the moment. Would you like to say anything?
Yes, I would. I'd like to thank the auditor for making the nursing home report this evening, and if you have any questions, ask him. Actually, you all received my report via email, hopefully today, and if there are any specific questions, I would like to point out a couple things. The budget will be presented to you coming up in the 21st. And there is a little over $500,000 in capital improvements that will be requested. And essentially, those $500,000 are causing the proposed budget to look to be $500,000 in deficit. Now, things could change a little bit when you actually get the budget, because I understand such things as health insurance may have improved, and there'll be some, pardon? And there also is going to be a private pay raise suggested to you for your consideration of 4%. And that's all covered within the report, so I encourage you to read it. Unfortunately, I do not believe I'll be able to attend the 21st meeting, so I want to pass on to you some of these ideas. And one of the suggestions I think that will be coming to you for your consideration is to take a look at the 3 million, at the bond debt service that is being now paid from the county, from the nursing home revenues, and that has been done since 2010. That amounts to around $300,000 a year, and the Board of Directors will suggest that the board consider that as part of your financial budgeting for next fiscal year to suspend that payment and reinvest those funds into the nursing home proper. It's a controversial item, but again, it's something that we propose to bring forward. And the obvious reason for doing that is to reinvest in the home, to upgrade the some of the physical plant, and to provide possibly some additional cash in the coming years. So that will be coming to you. And other than that, I would be glad to answer any of the questions you may have. Thank you.
I saw Rachel's hand first, and then Stan James.
On the 300,000, I know that many people disagree with me, but the county board never had a resolution that required the nursing home or the nursing home board to pay that. For whatever reason, the nursing home started putting it. My suggestion is for the nursing home board or whoever writes the budget to simply drop it. And if the county board so wishes, we can insist we have it back in there. But because this is paying for bonds that were for cost overruns on construction of the nursing home, and nothing else in the, we know the story, I'm not going to repeat that. I don't think it should ever be paid from the operating budget of the nursing home. I don't think it ever should have been paid. And I don't think it should be the proposed budget coming from the nursing home. As I said, if the county board wants to put it back in there, once we get the budget, we can put it in. That would be my proposal to the nursing home board.
Mr. James.
Well, I guess I would just say, who's going to pay it? General Corp? And if it was a debt of if it was a debt of the nursing home, in my mind, because of the cost overruns, it's like everything else. They have to swallow that pill and pay it.
It wasn't the debt of the nursing home because the nursing home wasn't in charge of the construction. It's the county board that messed up the construction, whoever it was, it doesn't matter.
I
None
don't
of us
think the
was
county
there.
board messed it up. That was probably the contractors.
If I can call an end to this conversation, I think we'll have more than enough opportunity to hash this out at the budget hearings. The budget hearing for the nursing home will actually be the 27th. Deb informs me, not the 21st. Mr. Quisenberry.
Yeah, I would just like to point out the last time Mr. Gimo was here, I questioned him on some of his charting choices. And if you look at page 78, you can see why I am frustrated with this continuation of using a linear projection to try to tell a story that is no longer the case. He originally put this line in to show how agency nursing costs had been going down over time, but it's not the case now. If you shorten the distance that you're looking at this, I'm not even sure this is really a true linear line anymore. It could just be a draw added line at this point, but these nursing costs are trending up again, and if you're using the line as an indicator that they're going down, you're missing the new trend. So if we could give Mr. Gima feedback that that's no longer valuable, I'd appreciate it.
I do acknowledge that this seems to be a reversal of the general trend. Ms. Schwartz.
I think it's a simple regression line that Excel adds. We can just drop it. Just drop it. I mean, we're not going to try to ask him to do complicated regression. So just drop it and we can all make our own inferences about what we think about trends.
I think it's probably less useful being there than being gone at this point.
That or shifting it to be like an 18-month picture instead of keeping the oldest, worst point on the graph on there indefinitely. It's not very meaningful.
That's actually also a very good point, right? We don't really need to know what contract nursing costs were like in 2010. Any additional comments or questions? I apologize if I missed anybody. Hearing none, thank you, Mr. Maxwell, for your report. With regard to the funding issue, I think it's a very reasonable request that General Corporate carry that. I am not at all optimistic that we'll have the resources to do that, but I certainly will entertain the request. All those in favor of accepting the report and placing it on file, say aye. Aye. Any opposed? That motion carries. We'll move on to budget transfers and amendments. Our first item is budget transfer 14-7. This transfers $112,841 from the contingency line to the general corporate sheriff, correctional center budgets, personnel budgets. This pays for increases in salaries due to the recent settlements of the FOP contracts. May I have a motion to send this to the full board with a recommendation for approval? Mr. Kibler and Mr. Quisenberry. Questions or comments? I would point out that this is a transfer from the contingency lines. Although this is listed as a budget transfer, it will require a supermajority when we get to the county board. Any comments or questions? Seeing none, all those in favor, please say aye. Aye. Any opposed? That motion carries. Budget Amendment 14-29, this is an increased appropriation of $2,500 from the fund balance. This covers a OPEB actuarial study, which is related to pension benefits. This is something we have to do periodically, but that was left out of the budget. May I have a motion to send this to the full board with a recommendation for approval? Mr. Esri and Mr. Kibler. Any comments, any questions? Seeing none, all those in favor, please say aye. Aye. Any opposed? That motion carries. Moving on to the final budget amendment, 14-30. This is the big one. This is $1.4 million even from the motor fuel tax fund, of which $750,000 is for the County Highway 20 and 11 County Highway 20 and County Highway 11 projects, that being Hensley Road and Thomasboro Road. $400,000 for the county's share of the Philo Road project that's done by the city of Urbana a couple years ago, and $250,000 to cover the large amount of salt that Mr. Blue just purchased for the coming winter. $1.4 million in total. May I have a motion to send this to the full board with a recommendation for approval?
So moved.
Moved by Mr. Kurtz. May I have a second? Seconded by Ms. Schwartz. Mr. Blue was not able to attend tonight. I will do my best to answer questions if anybody has any. Mr. James.
I thought that 400,000 at one time, if my memory serves me right, we were told that due to some federal funding in this, that was a wash and we weren't going to have to pay that. Some time back.
Not for Philo Road.
I thought it was.
No. Avenue, maybe?
No, it was Philo.
That doesn't,
There was some controversy over the intergovernmental agreement since federal funds were used. I don't remember all the conversation, but I do remember.
that was Windsor Road.
Was that Windsor?
That was Windsor Road, yes, sir. Because there was an issue about whether we could use funds to participate in a project that wasn't federally funded. Am I misremembering this? Mr. Quisenberry, can you resolve this question?
I can't resolve it, but I can tell you that the Philo Road project, which is the portion, the repair south of South Ridge or
South of Windsor to the
Deerfield.
city limits.
No, south of South Ridge, so even further on. This is the portion that is beyond the city limits. And it's like I don't know, quarter of a mile beyond
Yes.
South Ridge, southmost road. But I am having a similar recollection to Mr. James that something happened with whether this was a federally supported project or possibility, and I can't tell you that we ever resolved that. I might have missed that meeting, but.
I can add a little more to that, but let's give everybody else a chance. Ms. Petrie, and then I saw somebody over here, Mr. Esri, and then Mr. Maxwell.
I thought in conjunction with Philo Road project, it was that the boundary of Urbana was extended south beyond what was the original agreement, and the resolution was that the county would pay a portion of doing that work from the original boundary to the present boundary. Does that
Okay, I
resonate
can't,
with anybody?
yeah, I can't speak immediately to this, the federal money involvement issue. In that particular case, there was a question, there was, as I recall, not a question whether this was covered by the original Fringe Road Agreement. It was, but there was a point made that at the time the original Fringe Road Agreement was created, the city limit of Urbana was farther north than it is. So the project, as you can make the argument that the project as agreed to under the Fringe Road Agreement should have been some tenth or so, a couple tenths of a mile shorter than the actual project that was done. Now, we've had this discussion a couple of times and discussed whether, what Urbana's obligation was to control costs and so forth, and I believe that the consensus was that this was a fair involvement by the county. But yes, there was a question about the location of the city limit. Can anybody remember what this issue? I remember the federal issue was, at some point, IDOT declared that the Fringe Road agreement was essentially invalid because there were projects in which, I can't remember if it was federal funds or no federal funds were used, weren't eligible, and then IDOT later reversed themselves on that and sent out a letter that said, no, the agreement is valid, and I wish we had Mr. Blue here to address this. Mr. Kurtz, do you remember the progression here?
It's hard to remember all of the details, but I think you had the most recollection of it. At first, we thought the intergovernmental agreement was null and void. And then, I'm trying to remember exactly, that took place initially, and so we weren't going to fund any of that extension from Windsor south, because they wanted us, if I remember correctly, to share in that entire project. Is that correct? They wanted to share in that entire
Hold that thought, Al. I think Deb, as usual, probably knows the answer to this question.
Well, I don't think I know the full answer, and so I think what you should maybe all consider is making sure we get the full answer before the county board meeting. But originally, the Philo Road project, we were sitting under that resolution that we could not spend motor fuel tax money on the Philo Road project, even though we had it in the Fringe Road agreement. So there was some trade-off done with the Lincoln Avenue project. That has since been switched back when we acknowledged that we could do the Philo Road project, and now it's just time to pay for it. But I don't know the specifics, and I know Jeff can fully explain this. So rather than us all trying to speculate, maybe we could wait for the board meeting and let Jeff explain it.
Mr. Langenheim? It can certainly be forwarded to the full board without recommendation.
I was going to suggest we amend the motion to be one without recommendation.
Given that I think this has been settled, I would hate to push this back a month if we can take, because we're going to have to take it up at the full board meeting anyway. So if the board's comfortable with this being forwarded without recommendation, I'd be okay with that.
Do we need to formally amend it, or can it be withdrawn and redone?
Who moved it? Mr. Kurtz, are you amenable to forwarding this without recommendation?
Yes, absolutely, yes.
And Ms. Schwartz,
Yeah, so we
agreed?
can get the proper information.
Okay.
Let's get it straight.
Mr. Langenheim? We are ready for your next question.
Does anybody know anything about the status of the salt order?
Yeah, we bought 2,500 tons at $108 a ton
Thank you.
and 28 cents. Mr. Maxwell?
Is it inappropriate to comment on the Fringe Road agreement on the Philo Road?
No, I think it's all open at this point.
As I recall, the IDOT denied the use of motor fuel tax because this was on a non-federal aid system road. And that, and then the City of Urbana sought an opinion from the Attorney General's office that we could use it on this particular road. Basically, we can use motor fuel tax to match about any other road in the system. So that is why there were some, like Deb said, there were some talks about trading off Lincoln Avenue, which was on the federal aid system. Now we're back to being able to do what we wanted to under the Fringe Road agreement. And that's because of that Attorney General's opinion, which basically is state law almost. It supersedes any other local opinion, and it's considered the governing opinion until we get a Supreme Court ruling.
Yeah, my recollection was it was actually the IDOT General Counsel that issued the reversal, but I can't swear for certain. Mr. Quisenberry?
Yeah, is it possible that this rescission or this alternate opinion came subsequent to us going back to Facilities Committee, where as we discussed the original problem with Urbana and Committee of the Whole facilities?
No,
Because-
this has been discussed at the Highway Committee specifically as
That's
to
what I just
our
asked.
need.
It's been discussed at the Highway Committee. I think I have a recollection from the time we took this up in Facilities Committee of the Whole, and there has been subsequent information shared on the committee level about this issue that never made it back to the full board. So that's why two-thirds of us are confused, and Ms. Petrie, pay very close attention. This is the first evidence I've seen of that change going back to that type of committee structure, having caused confusion that where the board doesn't know what's going on because the committee is not reporting out key details that don't involve actual actions.
That is possible, but I can't recall one way or the other, which maybe proves your point. Ms. Petrie?
As you get these clarifications, which I think is where we're going from Mr. Blue, I would like to hear from him, and maybe it'll happen during our budget time, how all of these expenditures are going to fit in with the forthcoming road building and road plans, and his comment to us several months ago that by 2016, motor fuel tax monies are going to be virtually no longer, as Ms. Schwartz just said, not in existence. So I'd really like to have a big picture of all of this. We're spending, I understand what's all behind this, but it's a big chunk.
Yeah, I'll certainly ask Mr. Blue to address that. I mean, most of this is money that was anticipated to be spent anyway. Certainly the salt and the participation in the Urbana project were known costs. The thing is new is a decision to do a full recycling on the County Highway 20 and County Highway 11 projects as opposed to just a resurfacing. Ms. Bergson.
If we knew that the salt and the Philo Road bills were coming in, why didn't we budget for them?
It's the way we do motor fuel tax money. Essentially, it's a timing issue, and a lot of the times the motor fuel tax money ends up coming to the board to actually get spent. Any additional comments or questions? Mr. Quisenberry, one more.
Is there a chance that Mr. Blue would be able to attend the full board meeting to
I
support this
expect there is.
conversation? Thank you.
Thank you. So the motion is on the floor is to forward this budget amendment to the full county board with no recommendation. No, it's already been moved and seconded by you and Rachel. Any additional comments or questions or discussion? Hearing none, all those in favor, please say aye. Aye. Any opposed? Mr. J, that will go to the full board, not on consent with no recommendation, which it wouldn't anyway. Moving on, we're done with budget amendments and transfers. We'll go to item F1. The Illinois Emergency Management Association Assistance Grant being requested by EMA. May I have a motion to approve the application and acceptance? Mr. Esri and Ms. Michaels. Any discussions? Seeing none, all those in favor? Oh, I'm sorry. Thought I saw a hand over there. Okay. All those in favor, please say aye. Aye. Any opposed? That motion carries. Moving on to the state's attorney, item G1, request approval of a contract with DCFS and the Champaign County State's Attorney related to termination of parental rights. May I have a motion to apply for this grant? I heard Mr. James and Mr. Kurtz. Any discussion? Hearing none, all those in favor, please say aye. Aye. Any opposed? Item G2, under the state's attorney, this is requesting approval of the Violent Crime Victims Assistance Program grant agreement between the Attorney General and State's Attorney's Office. May I have a motion to accept or apply for and accept this grant? Mr. Esri and Mr. McGuire, may I have any comments, questions, or discussion? Seeing none, all those in favor, please say aye. Aye. Any opposed? That motion carries. Moving on to item H1, this is the finance end of the recommendation from the Job Content Evaluation Committee regarding the forensic interviewer for the Children's Advocacy Center, which we took up under policy. May I have a motion to approve? Mr. Kurtz, second. Mr. Quisenberry. Any discussion? Seeing none, all those in favor, please say aye. Aye. Any opposed? That motion carries. We have no other business. Brief note as a chair's report. I mentioned this in my finance memo, and I did so in a confusing enough manner that I feel I should clarify now. At the recent Facilities Committee meeting, a proposal was advanced to contract with an engineer to investigate cracking and potential joint failure at the satellite jail building. The amount of the contract would have been $44,800. That was forwarded by the Facilities Committee to the full board next week with no recommendation. In order that the board could approve that if it so chooses and have the money to pay for it, what we'll be doing is we'll be bringing that recommendation from the Finance Committee without, or that item from the Facilities Committee without recommendation. We'll also be bringing a budget amendment for $44,800 to pay for that study. The resolutions will be written to be contingent on each other, so they have to both pass in order for us to do that. We don't need to have a discussion about it now. We'll have the discussion about it next week, but I wanted people to understand procedurally how that's going to work. So we'll have both a contract approval and we'll have a budget amendment, and they'll be essentially mutually contingent. Ms. Schwartz.
So are we going to have definitive information about what the other contract is doing it? Yes. Is somebody going to read it and tell us? However.
Ms. Busey says yes. We'll find out when we get there. Any questions on that issue? Okay, that concludes finance. Items for consent are E, 1, 2, and 3, F1, no, sorry, E1 and 2, F1, G1 and 2, H1. Thank you.
Thank you, Chris. Appreciate it. Astrid, you're up.
Any objections to combining these reports? I'd like to, someone to move. I would like someone to move that we accept these reports and.
I so move. Second.
Okay, we have a,
Any,
I'm sorry, Ralph, were you the first? Yeah. Okay, and Jeff was the second, okay.
any discussion? All in favor?
Aye.
And just as a minor chair's report, the reentry program is getting started and get started slowly. They're applying for grants. They're setting up programs and so on. I think probably by about October, they would be able to report. Okay. That's all.
No other business, no chair's report, nothing, all these, okay. We're at other business, approval of the closed session minutes. I need a motion, June 10th, 2014. Stan? Second, Chris. All in favor? Aye. Opposed? Motion carries. One other thing, other business. Next week, the Champaign Urbana Public Health, Jim Roberts, will be bringing an extensive report and survey of the placard system for the first 6 months of this year. We've already gone over that last night at the board meeting of Champaign Urbana Public Health, and some surprising and very satisfying results have taken place, and there'll be a complete report next week of that survey. So I just wanted to prepare you for that. James.
Mr. Chair, can I ask why that wouldn't be considered under a policy cow? Why that would be coming to the full
I was
board?
just making note that he was coming with that.
But he's
survey.
coming to the full board meeting?
I'm sorry.
Why is he
I don't know.
skipping the
I
cow?
asked him last night, he said he was coming to the board meeting. I wasn't sure if he had talked with anybody on it.
Why would it come to the board if we didn't do the placard system?
Oh, it's just, that's the survey, should have gone through policy, shouldn't it?
If the intent of him coming to present this is to persuade us to revisit this
No,
and
it's just the study that we recommend, we asked for, if I remember correctly, when he said he would make a study of the placard system. If I remember if Stan mentioned that.
We asked him to do a trial track.
Do a trial tracking for the first 6 months. This is the response to
Want
that.
to comply without being forced to comply, and how that.
okay, thank you, that
That's what
clarifies
was,
it.
Yeah, it was a volunteer.
And I just want to state, I did see the surprise on Jay's face.
Is he the one who was surprised? Okay. All right, since there's no other business, a motion to adjourn. Jeff, second, Stan, all in favor? We are adjourned till next week. Thank you.